Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Friday morning. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleague Surabhi and Nigel. Guys, hi, good morning.
Hi, good morning. And the smiles will always be bright. No matter what the cues are, if it's a Friday, you'll find us very, very chirpy. But guys, also, it's the end of the financial year. This is the last day because then, Monday is a holiday. Extended weekend is coming up.
Lead with that. The smiles because of the Monday holiday.
That too. We're winding down a year, and I'll put the sort of numbers up. For me, as I look back, it's been a sobering year. It's been a year that's taught us quite a bit, and we're ending it on a good note. I think that's the best part.
Well, that's right. The market mojo seems to be back in the month of March, so that was good after 5 months or so, and things are looking pretty okay for April. All eyes on what Trump will do, the RBI, and earnings. So let's see how that goes.
That's already very loaded.
All right, well, let's take it from the top then, right, in terms of what you need to know as we begin this new session. So markets globally continue to see a bit of a chop. And chop continues around continued tariff uncertainty. And that uncertainty will go away, I'm assuming, in the third. Unless and until, well, they add more uncertainty by doing something, holding off on something and saying, well, more is coming. But, well, that's the kind of market we're in. U.S. equities lower in a bumpy session last night. Nothing big. I mean, Nasdaq was down about 0.5%, neither here nor there. The dollar index came off a little bit as well, so about 0.2% down. We were about 104 point, almost 104.5, so it's come off a little bit. You have U.S. fourth quarter GDP, actually a bunch of data which came through. GDP numbers were better. But other data was all kind of here and there, mixed largely. All eyes, of course, today on U.S. core PCE number, which is a preferred gauge of inflation for the Fed. So I think this should be in focus as well. And by the way, Fed officials continued to comment on, and I think there was one gentleman who's a voter on the FOMC who came out and said, well, he didn't say anything definitively. Basically said that, well, tariffs can cause higher inflation. We need to see if it's really going to be transitory. And I think now we've heard this from two of the Fed officials, kind of in a way softly pushing back against what we heard in the FOMC itself, that inflation is transitory. And the markets kind of took it to say that Fed will cut no matter what. So we'll have to see. And I think in that context, this data later today is important. Now, the Nifty's managed to stay above the 40-hourly exponential moving average. Yesterday was a good session. The only kind of uncertainty or hesitation we had was right at the open. I mean, and then the market really picked up and then never looked back. Although it didn't go, big time on the upside. But we managed to trade above. Actually, we bounced from the 40-hourly exponential moving average almost exactly. Broader market looked very healthy. Not because advance decline was wildly positive. It was largely 1:1, actually maybe even declines more than advances. But volumes were on the upside if you look at broader markets and what really happened. Now, Nifty should, if this is it and if it was just a 2-day wobble and the market now moves right back up, we should hold the 23,412 level, which is yesterday's low. That should not come back into reckoning, come back into contention. Bank Nifty also bounced back yesterday. And again, I mean, I think it's a bit of a test in that sense, right? It's not fair because it's a 3-day weekend and you'll have that playing in, especially if you're trading. But, I mean, if it's a test in terms of whether we've seen a little bit of sideways down action on Wednesday and Thursday and, Tuesday and Wednesday, and yesterday is kind of confirming the upside, we need to hold these levels. For the Nifty Bank, it'll be confirmed if we close above the recent high, which is 52,063. And on the downside, the Nifty Bank should not break below 51,050, which is yesterday's low. So that's the short and sweet kind of, lay of the land. But it is tricky, most definitely, with everything we are hearing and not hearing about tariffs, which we will pick up on in a more comprehensive way early next week when we come back from this 3-day weekend. 23 points lower on the GIFT Nifty. Surabhi.
Okay, well, there's some caution across Asia. No sort of doubting that. I'll get to that in just a bit. But like I said, it's the end of the year. So I want to start with that data first up because it's been a sobering year. It's been a year that has taught us that, don't put all your eggs in one basket. Don't get over-enthusiastic. And, basically excesses of the market will always self-correct. That is a lesson that this financial year, 2025, taught us. So that's the tally. At least we've got some green for what it's worth. So it's good. About 5.5% up on the Nifty. Small cap index in the same range, mid cap index up about 8%. Like I said, sometimes lessons are really, really good and the market is always the best teacher. Okay, now let's talk about those cues that we're getting in from Asia. The markets are fairly mixed at this point in time. I mean, you've got a little bit of green on the Hong Kong Hang Seng. Japan is down quite a bit. Japan is down almost 2%. And that's because of the auto impact playing out. Yesterday itself, we saw that impact on Asian automakers. We saw that play out in a lot of the European automakers as well. So those concerns are still lingering. However, of course, the watch point is going to be this PCE number from the US, and the expectation is this February data that will come out today, that the yearly increase is going to be 2.5% and no more than that. So let's see. By the way, Trump yesterday was, strong-arming both Canada and the EU. He said something very interesting on Truth Social. He says that the European Union works with Canada in order to do economic harm to the USA. Large-scale tariffs, far larger than currently planned, will be placed on both of them in order to protect the best friend that each of them had, that ever had. So basically now, and this is interesting because beyond the rhetoric, will he follow through on it? Because what is happening is that the world is seeking newer alliances, newer trading partners. And he's saying, I'm going to come after you if you do that. So let's see, never a dull moment in Trump land. Let's talk about the numbers then. The FPI selling has been reducing constantly. We saw some, positive numbers yesterday as well. For the year so far, look at that. The net selling is now down to just about 12,000 crore rupees. I think Nigel was making the point yesterday. Can we end positive with the year? I don't know whether today's number can really undo this. We'll find out. But anyway, at least it's come down, which is good news. Lots of interesting stocks in the news, on the radar. The order wins are very strong, particularly for defense companies. We knew that, and it's really showing up in numbers. Yesterday, these two companies, Force Motors and M&M, they will be supplying anti-tank weapon platforms and light vehicles to the army. The total value of the contracts that they've got is about 2,500 crores. We had Bharat Electronics announcing more order wins as well. About 1,400 crores is the value of the orders that they've won. Samvardhana issued an important clarification. Samvardhana says that they are not going to be impacted by the US auto tariff order. They're saying that a lot of their products are supplied to the US either from US plants or through Mexico, which is protected by this agreement that they have, the Canada-US-Mexico agreement. So that is their status. So as usual, lots of stocks that we'll talk about. And Nigel, never a dull moment when the war of the exchanges is there, right? There's so much going on with what SEBI is now saying there as well.
Well, that's right. That's going to be another focal point as well. But at the start of the March series, I'd made this point that I won't be surprised if the Nifty outperforms for the March series. I think it's played out that way. So quite happy with that front. And, history suggests that April is actually a better month. I was looking through a Novama report and they said, on a 10-year average, well, both the Nifty and the mid-caps, they do well in the month of April or the series of April. So that's another data point to clutch onto. But March was a good series because after a while, the bulls were back on top and we broke the losing streak that we saw for 5 straight series. So the Nifty did well. It was backed by the Nifty Bank. They did a relative outperformance and the breadth of the market as well was very, very good. Now we start off the new series. And if you look at the total open interest for the market-wide positions, well, that is more or less in line as what we saw, in the past series. But however, if you look at the Nifty open interest, this is the Nifty open interest that we're talking about, well, that is much lower. And normally when you see it, when the open interest on the Nifty is relatively lower, it's normally a positive sign. So this time around, market-wide in line, but Nifty open interest is relatively low if you compare it to the previous series. What about the FIs? They have been net short for all of the other previous series. Now it seems they're doing a bit of a tilt, not just they're buying in the cash market. On the short positioning as well, it's come down drastically. Only around 30,000 contracts is on the short side. And in percentage terms, well, it's at around 60%. This is the lowest short positioning we've seen at the start of the series all the way since October. Don't want to scare you, but October wasn't a great month. However, this time around, the total open interest itself on the Nifty is relatively lower. So that, in fact, is the overarching theme. And that's the big positive. So we'll keep an eye out on that front. What about clients? What are they doing? Well, their long positioning actually has come down. So after being aggressively net long in the last couple of series, now the net long positions are only around 8,000 contracts or thereabouts. So the FIs, well, they have done a bit of a U-turn. Their long bias has increased in comparison to previous series. While you've seen the clients, they have unwound some of their positioning. Even if you look at, the stock futures, just take a look at that. Both of them are net long. The FIs, they have increased their long positioning on stock futures. While if you look at the clients, they're still net long, but they've reduced their net long positioning on stock futures as well. Crucial levels to track. The options data is suggesting this 23,300, 23,350 becomes the important mark. So that's the line in the sand on the downside. On the upside, a fresh breakout once we get past the 200 DMA. So that's the important mark you're looking at. On the Nifty Bank, well, yesterday we highlighted this. If the Nifty needs to fight back, the Nifty Bank needs to lead the way. And that's precisely what happened. Now the resistance level comes in at the highs that we saw earlier this week. And you have the reference point at the 100 as well as the 200 DMA. Big cues that you're tracking for the April series, obviously it's going to be what is Mr. Trump going to do and how is India going to retaliate. So India, US tariff policy is important. The RBI meet, that's going to be important. The street is bracing for a 25 basis point cut. And earnings season, midway through the series, that's what you're going to focus on. The stock of the day could be BSE because of that SEBI consultation paper. And now NSE is saying they're not going ahead and changing the expiry day. So BSE, they're going to be considering a bonus as well. And added to that, this particular piece of news will be good. So we'll keep an eye out on this one. Could probably be the stock of the day.
All right, but the last word has not been said.
Indeed.
This, right?
Consultation paper is still out. And
it's,
no, but the fear was that they'll lose a lot of market share. So at least in the near term, you could, it's suddenly come as a positive surprise. The stock was weak, suddenly you have this bonus issue and you have this piece of news. So double trigger.
Yeah. Only thing is that what happens if NSE, after this consultation, etc., moves to Tuesday? Because Tuesday makes sense, and then BSE moves to Thursday.
So the feedback that I got on that front was, since we were discussing internally as well, is that in all probability they won't be allowed. That's at least the market perception that they won't be allowed because BSE has already claimed that, and so that maybe the regulator doesn't allow them. All in the air, but that's another option. We'll have to see how
this reminds me of school time fights. I want to sit there. No, I want to sit there. Then the teacher had to come in saying, "You sit in this row. You sit 3 rows behind."
Tell you, there was no money involved there. There's thousands of crores involved.